So why don't we throw to the first question and just see if there's any responses or reactions to that? What do you think the main cause of the expectation gap related to fraud and going concern in an audit of financial statements is? Maggie, hands up, excellent, and then we'll go to Annette. Maggie, do you want to go first?
Okay, so my name is Annette Kohler. I'm a professor of accounting and auditing. I serve as a member of 4 supervisory boards, and I used to be an IAASB member, so I really felt very excited when Bev contacted me and asked whether I would be, willing, hopefully able to contribute to that roundtable. I think it's a great idea. I always appreciate it, as you may remember, your outreach, and I think it's absolutely necessary, particularly when it comes to those topics here. I mean, coming from Germany, having, the Wirecard background, of course, now keeps me busy, but also, of course, going concern. Now, talking about COVID will be, a real important topic. So I'm really glad the IAASB picked that up. I think it's a great opportunity to really demonstrate that the IAASB is working in the public interest. I mean, that's our mantra, and I think it's still very important. My first comment would be that I think there's a fundamental difference between the issues we have around going concern and the issues we have around fraud. So I think by nature that the expectation gap would differ between the expectation gap, with respect to going concern and fraud. Going concern is a problem that we have sort of that inherent limitation when it comes to uncertainty with respect to future events. So we're all sitting in sort of the same boat, it's the auditor, it's the preparer, but it's also I think the capital market participants, investors, but also, of course, audit committee chairs, when it comes to the uncertainty, what's going to happen. So I think there's not that much of conflict of interest between the different parties. So that's number one. Number two is with respect to reporting about going concern, we have a problem of the self-fulfilling prophecy. And that really is something that we always have to keep in mind. If we talk about going concern and report about uncertainties with respect to the ability of a company to act as a going concern, capital market participants may have the inclination to misinterpret that information, so that in this case, that the company or the entity really gets into even deeper problems. So this is fundamentally different from the fraud issue, really, because when it comes to fraud, I think there's expect for top management fraud, like obviously in the Wirecard case, but with all the other types of fraud, I think there is no sort of conflict of interest between, say, the preparer or the audit committee chair. But there may be some inclination not to do enough from an auditor's perspective, because all fraud-related procedures, are relatively time or work intense. So I think, this is something that we have to talk about. Where's the incentives for the auditor? Where's the incentive for an audit committee chair? Where's the incentive for a preparer? Because I think with respect, or due to the fact that the audit procedures with respect to the detection of fraud are relatively expensive. So there's relatively little incentive to really go down this route usually. So I think this is something that we have to keep in mind. So coming back to your question, I think the standards, are actually fine. It sounds probably stupid, but I looked at ISO 240, and I thought, well, it's actually all in there, and there's so much, of course, judgment that the question is rather, what goes wrong, in applying the standards, if there's anything going wrong, but what probably goes wrong in applying those standards, given the incentive system that an auditor has, and that is, very tough time limits, very tough budgets, high competition, no actual no reward, in detecting fraud, because, this is something that you don't really want to do, right? You detect fraud and you have to go to your CEO and CFO and say, listen, you've got a problem, in this or that entity or this in this country. So there's a sort of a adverse incentive, I think, in the audit. And this is the reason why I think actually I wouldn't call it an evolution gap. So because I think that the standards are actually quite okay, there might be some sort of performance gap, because the application of the standard is quite when it comes to fraud particularly, is quite a challenge due to those limitations. And I can tell from my own audit committee experience, I've seen so many presentations of the auditors of the companies I sit on the boards, where fraud is, or the, descriptions about fraud, they're actually left to the appendix. You have a 1-hour presentation, right? 30 slides, and slide 31 in the appendix, the description of team composition, and all the other things, and then, you have that one slide on fraud. And that is really an issue. It's really, and I think we really need to change awareness. I mean, we'll come back later to all the different sort of aspects, and I think there's audit committees that have to change their behavior. It's auditors, sure, but we also have to learn from inspection insights, because there must be some information out there of how we can further sort of make sure that we have a feedback loop, that we learn from insights, from inspections, that feedback, to audit procedures and how audits are planned and actually done. And this has also to be communicated to the audit committee chairs. For example, coming from a jurisdiction where we don't even see inspection reports, not even the high-level reports, it's really difficult to raise awareness to a level where it actually should be. So, I mean, and I see a clear role there for the auditors, for audit committees, but also for inspection teams, or the oversight, to better inform the loop, of what can be done better. So I would rather think it's a performance gap issue, not that much of an evolution gap issue. Talking about the knowledge gap, I clearly think that, the public doesn't know enough, about the role of the auditor, about the role of management. And I'm afraid, that our new reporting standards haven't really made that much of a change. We talk about them later on. But the problem really is that the meaning of what the role of the auditor is, for example, with respect to the detection of fraud due to fraud, is unclear, because it says, well, there is sort of a different risk that's still there, but what does it mean? Is it half as high, or is it 20%? Is it 10%? Is it 90%? So the meaning, of the words is really difficult. So I'm much more in favor of CAM. We talk about this later, because I would think this is something that we could really talk about, introducing CAM with respect to what the auditor did for the detection of material misstatements due to fraud. So I would clearly say performance gap, then knowledge gap, very little evolution gap.
Okay. Maggie, I think.
Thanks very much, and it's a pleasure to be here. I just firstly wanted to pick up on a point that Josephine raised when she did her introduction, which was saying that actually there's a wider ecosystem at play within that, and I think absolutely we need to keep reflecting on the fact that this is not something that IAASB or auditors can solve in isolation. I think going now onto the sort of expectation gap, I would agree with Annette that actually in terms of going concern and fraud, there are differences. It's not the same expectation gap. I think with going concern, you do have that level of uncertainty and potentially the expectation of some users, perhaps those less informed users, that it's not assurance we're providing, but insurance against any corporate failure. But I thought it would be useful just to pick up in terms of the expectation gap across those three areas. Now this illustration of the expectation gap we drew on, or we developed in one of our pieces of research. And that very much clearly said that the expectation gap, there is an element which is the lack of knowledge. And I think that comes through very clearly in these two areas in terms of what the role of the auditor is. There's definitely a performance gap in terms of whether standards are followed or whether standards are understood. But I think there is still an evolution gap in both of these areas in terms of expectation. So I thought it would be helpful very briefly just to give you a couple of data points that came out of our research. So this went to members of the public. So we had 11,000 members of the public across 11 countries. And the first thing we actually asked them is what an auditor did. And so we had one, which was provide an opinion, and a number of other opportunities, which was verify and basically check 100% accuracy. And actually only a third of respondents were able to identify what the auditor did. And that dipped quite significantly in the UK, where it was only actually a quarter. We then actually looked at fraud itself in terms of, well, what was the role of auditors in respect to fraud? And there, the expectation on the auditor was significantly higher than the standards would require. So certainly an expectation amongst the members of the public that the detection and identification of fraud should be much higher, and very few saying they didn't know, so very clear indication. In terms of the going concern, we focused, and it was very much put into sort of layman language, so it was very much about corporate failure that we asked the questions. And we did ask, if auditors did their job, should it prevent corporate failure? And over half of our respondents said, yes, it should. Auditors should be detecting it. And that was interesting because we had quite a big spread there between Malaysia, which was up at 75%, down to New Zealand, Canada, where actually the majority said no. And it was interesting to see, therefore, in the evolution where they wanted to take audit, and there was a very strong appetite for greater work around going concern. So whether it's achievable or not is a different matter, but I don't think we should necessarily dismiss those elements in terms of it. But I think in terms of the what's the main cause, I think certainly in respect of these, we would see knowledge as one of the key gaps at this point, but certainly a demand, and we're seeing that come through in the UK in respect of the Bryden review and the findings there in terms of actually where audits should ultimately be placed.
Thanks, Maggie. And those insights on what they said around going concern will be helpful in the second breakout, because we'll talk a lot more about going concern then. And I think just for everyone else's benefit, you're at ACCA, I think, Executive Director there. So I think next hand up, thank you very politely.
Yeah, I never introduced myself, sorry.
That's all right. Thank you for being very patient. Suresh, I think you're next.
That's fine. Thank you very much. Good morning, everybody. My name is Suresh Khan. I'm from South Africa, and I was the senior partner and head of audit at one stage of PwC. I'm currently a non-executive director in a number of companies, but I was also an IAASB member from 1995 to 2003. So that looks like a long time in history, but it just, you know, you never leave this community. Somehow seems you always remain connected. Yeah, you know, my view is that I think it's a bit of everything. There's a bit of knowledge, there is knowledge gap, there's performance gap and evolution. I think from a knowledge perspective, I think, you know, you have social media playing a huge role now in terms of what expectations are from markets and average people. And somehow, you know, social media is becoming a very, very important area, and in terms of everything in life that we manage. It shapes perception so much of what people are doing now, and reputation. So whether they're right or wrong, I think it's an important thing that we need to take into account. On the performance gap side, I definitely think that auditors could do more. When, again, I think Annette raised the point that when you're sitting in audit committee meetings, you just get this, all the risk areas, and then when you deal with the last item is this one slide on fraud, and it's just it's almost like, let's not talk about this. That's kind of the kind of message you get. So I think that needs to be more upfront. And I suppose when I talk about performance gap, and it's a very hard one. And so I'm not saying that there's an easy solution to this. But when we look at all these scandals, we keep saying that when there's collusion and things like that, particularly collusion and management fraud, that auditors can't do anything. But that's the big ones. Whenever you're hearing the big ones in the press and society, it's the management fraud and the ones where there's collusion. Now, I'm just saying, I think we can continue contracting out of it, and I understand how challenging it is. But I'm just saying that that's a real one. Coupled with that is related parties. We talk about going concern as an issue, but related parties is a very important component of this whole thing, because whenever you're seeing these frauds, there's always some kind of related party involved and not identified, or audit procedures not performed adequately. And then there's the evolution gap on this as well, because I think we've got to use technology a lot better than what we've been doing up to now. I think, when I do have a feeling of the technology that the larger firms are using, I think they've evolved a lot. But, I think there's still a lot more we can do. Artificial intelligence is a lot better. You can move a lot more. I'm not saying the things like journal entries that are being audited and that, those are still the basic things. I think we still need to get, I think we need to talk about using artificial intelligence to do audits rather than automating what we did before. Because I think that's what's happening. We're automating a lot of what we did before, rather than using the deep insights you can get out of artificial intelligence. So I think, as I say that, I think it's a bit of everything, and but it's a tall order to kind of fix, every area, because, I think Annette mentioned, it's also not only the auditor, it's about the whole corporate governance chain, all the capital market players, they all have to come to, whether it's audit committee members, whether it's rating agencies, whether it's analysts. I mean, how many times we hear that, after the event that, analysts knew something and felt something, but didn't say anything. So I think it's everybody's role. Regulators have a role to play, audit committees have a role to play, boards have a role to play, auditors have a role to play. So I think it's everybody, and I think that's what makes it quite challenging, is that we have a scope and maybe an area which we can influence, which is auditor performance. But how do we influence all these other areas? Because you need cohesive performance from everybody. If you need a car running smoothly, it can't run on one piston. It's got to run, everyone's got to be firing. So I think that's the important thing that I would say. I think it's a bit of everything, but it's a tall order. Thank you.
Thanks, Suresh. You've totally depressed me too, because I thought once I finished my term on the board, I would just sort of exit and disappear, but you say you never escape it, so thanks for that. I know, Zaiton, you've been waiting very patiently as well, so we'll go to you, and then what we might do is, because I'm the moderator, when we go back, I'm sure no one else is going to get to the last couple of questions. They'll get into detail on these first few. So we're going to jump to question 4 once we've heard from you, Zaiton, so over to you.
Thank you very much. Can you hear me?
No problem.
I think there is the disproportionate dependence on the external auditor to detect fraud. It's definitely an expectation gap. I'm speaking from the perspective of an audit committee chair. I've been chairing audit committees maybe for the last 20 over years in the Malaysian corporate scene. And I think the responsibilities of the audit committee is heavy. You need to ensure there is competent finance function in these companies. there's a competent internal audit functions, because you look at what is happening in the company every day. And you can't expect the external auditor who comes along maybe, during the audit cycles, few times a year to detect fraud when you who are sitting there are not doing much to detect it yourselves. So I think, audit committees have to ensure that there must be a competent internal audit function. There must be a whistleblowing framework that works, and these things are flagged up, because fraud is not something that you can just detect like that. It is difficult for you to detect fraud, for it to really come up to your attention. And therefore, I think it is incumbent on all audit committees to ensure that these mechanisms are working effectively in the companies where we chair the audit committees. And then I also think that there must be a constant communication between the audit committee chair and the partner in charge of the audit, which I do. I talk to the partners in charge of our audits all the time. Anytime, I feel uneasy about something, I give them a call. Hey, maybe you want to check into that. I think some companies may be a little bit apprehensive about doing that in terms of, protecting the company's image, and they tend to keep it to themselves. And then you wait until the end of the year, and then the external auditor will come in and say, are you aware of any frauds? And then we say, oh, no, none. Is that really the case? Does it have to be a big fraud for it to be flagged up? Because sometimes it's the small telltale signs that could lead to something bigger. So I think it is an ongoing job of audit committees, of auditors, and the best way to tackle this is actually to work together rather than push responsibilities to one another. And by working together, hopefully, it would be in the best interest of the company. And therefore, I think just now when we had the poll, I actually was one of those who answered all of the above. I think if you look at the frauds and scandals which have happened, it is difficult to pinpoint to any one reason. There are many contributing factors. And it's just that all of us have to be alert and do what we can within the scope of our own mandates, so that it is actually a joint effort. So as to what IAASB can do, I think perhaps it's more education to address this expectation gap, because people are expecting a lot more. The actual financial audit is not necessarily designed to detect fraud. I think the first speaker said just now, it is expensive within the limited time. So this over reliance on the external auditor to detect fraud is, I think, misplaced, and that needs to be that can only rather be addressed through more education, outreach, and sending out sort of the right messages to all the stakeholders. I'll pause there. And
thanks, Arton. That's really helpful. We're very privileged. We've got 3 so far out of the 4 of our participants who are all non-executive directors on audit committees, chair audit committees as well. So the insights you give are invaluable, and I have to somehow distill it down to 1 minute or less once we get back out of the breakout group. But rest assured, Bev, who's also on the call, that you can see there, is frantically taking notes. She'll have RSI by the end of this. So thank you, Bev, as well, for taking notes. We're going to jump to question number 4 and hopefully cover off in the remaining time, which I'm sure you can probably see the clock clicking down. And the reason there is a clock is because it will just cut out as soon as we run out of time. But I thought we'd spend the rest of the time that we have available on question 4 and question 5. So why don't we kick off with question 4, which is around, and this is just around fraud. So going concern, obviously, we talk about separately in our second breakout session. But whether or not you think more transparency is needed around what the auditor is actually doing in relation to fraud in their audited financial statements.
If I may, I just kick off again. Well, the question, I think, is what's the implication of transparency? What's the benefit of transparency? Why would we need transparency? And I think, and this has just been mentioned, one benefit is education. It's, you know, information in our case now, reduce what we call it, the knowledge gap, right? So that's I think that's one part. But I think there's much more to transparency, and that is transparency can actually change incentive systems. I give you an example. I mean, if you report, for example, in a CAM that there is, you know, very little headroom in your goodwill impairment, you know, that actually will change behavior. It's not only changing behavior, you know, of potential investors, but it's going to change behavior of management, of the preparer. And it's also changing behavior of the audit committee, because they will, you know, enter a discussion about how much headroom should be there, how much headroom should we have when it comes to goodwill. And this is the real benefit of CAM. You know, CAM not only, you know, provide information to the capital market, so to enhance sort of, you know, capital market reactions in what way, but it actually, you know, enhances the communication between the audit committee chair and the management, because it's the topics to have on your agenda. It's not only the radar screen, it's your agenda, and you go through them and you discuss them, and it's the auditor that really has a key role there to really, you know, help the audit committee to fulfill, you know, its obligations, its duty. You know, audit committees are highly dependent on input from auditors. And the same is, of course, true for their findings, their observation with respect to the detection of misstatements due to fraud. And I'm sorry to say, but I think auditors really should do more in that field. I mean, I repeat myself. And the question for me is now rather how we can support auditors, how we can, you know, enable them to do more. And so what we at the end of the day talk about is awareness and its budget, right? They potentially need higher audit fees, but within a limited time frame, they need more people to come up with more extensive work on the detection of fraud at the end of the day. And in order to provide them with additional budgets, we have to have the discussion on this issue first. So we need, it's like a communication cycle. We need, you know, feedback from auditors on what they were doing, you know, and in order to give that sort of maximum attention, you know, what would you expect me to say? CAM, you know, it's if you have a CAM on, you know, fraud detection or the detection of material misstatements due to fraud, let's put it that way, you know, you have maximum attention, you have maximum discussion, and then of course you have, you know, you actually enable the auditor to ask for a higher budget. It has an implication on audit fees, because if we, you know, as stakeholders want more from the auditor, we of course have to pay for it. I mean, it's an economic issue. And if, you know, the society, the public, you know, wants higher assurance, this is what we actually talk about. It's a higher assurance level on the detection of or material statements due to fraud. If you want a higher assurance level, we need other or more extensive audit evidence. And audit evidence means audit procedures, and audit procedures means resources. So at the end of the day, we need higher budgets, higher awareness, and one way to leverage that process is the introduction of CAM.
And so that would mean, I suspect you're saying you probably change the definition of a CAM or have a required CAM in all instances, because at the moment, in theory, if you were spending an amount of time that met the definition of CAM, you would report on it anyway, but maybe they're not either spending the time or it's not meeting that hurdle of what would be a required CAM for reporting purposes.
Even if it's not a significant matter, right? Even if it's not sort of I'm not saying a significant risk, because it is a significant risk, but even if the auditor doesn't really spend that much time, even if that doesn't, keep the auditor awake at night. That was always sort of, in our mind when we wrote the requirements. In order to have it in the mind of the audit committee chair, you still need the CAM.
Yeah.
And I think I would, from an auditor's perspective, I think if I were you, I would push back, because of course, if you're out there with the CAM, it's a clear communication to the capital market. And unfortunately, in the Wirecard case, we had a CAM on exactly the issues that were out there, in the market, with all the rumors, with the Singapore branch and the Singapore issues. And unfortunately, or fortunately, I'm not quite sure, the auditor actually included a CAM on all these allegations. And they even described their audit procedures. They even described that they had included forensic experts in their audit. It's all there in the CAM. So I see the problem, and if I were you, I would push back, because there's many people out there I personally know who actually bought Wirecard shares, when the audit report came out, because they said, look, there's the CAM, and so if there's even in the CAM, and everything's fine, I can buy shares. So
yeah,
I see both sides, right? I see both sides.
Yeah.
I think it's still, a way to raise awareness and to, at the end of the day, increase audit fees, because I think this is where we have to go to.
Yeah.
Higher budgets.
Well, that'll make auditors happy, increase audit fees.
Yeah, if it serves the public interest, I think it's fair enough.
I agree. So I'm just looking at my list of names. If we've got their hands up, Zaitan, I just wanted to check, is your hand still up from the earlier question, or did you want to make a comment on this question?
I just want to add to what Annette has said. And if you look at audit fees, some audit committees actually think their job is to reduce the audit fees, which I think is wrong. If you, I am actually supporting Annette's point, because if you look at some of the fees they pay to consultants, for example, to come up with a strategic plan, is way, way higher than what we're paying auditors. And it is the auditors who are giving us assurance about the controls and financial soundness of the company. So I really think auditors should be remunerated fairly for what they do. So I'm just supporting Annette's point. Thanks.
Thank you, Maggie. I think you were next, and then we've got Suresh. So Maggie, you first.
Excellent, thank you very much. So yeah, I mean, a lot of what I was going to say have been covered by Annette, so I won't reiterate that, but I do think transparency, but not transparency as an end in itself, because anytime MD mentions transparency, everybody goes, oh yes, we'd love some more transparency. I think it's in terms of what it can achieve, and I think there's sort of three key areas here. Firstly, I think if we get to, we've talked about it being an equal spread between knowledge, performance and evolution, or parts of all of them. To get to the evolution gap, actually, you've got to address the knowledge and the performance gap first, and in particular, the knowledge gap. There is a linkage, I think, between, or a correlation between a knowledge gap and an evolution gap. So the more someone understands what they're getting now, the clearer they can be and the more reasonable the expectations can be in terms of the evolution gap. So if you're not knowledgeable about audit now, it might be your evolution gap is that it should detect and report all fraud, which is never going to be achievable within the sort of tensions and are inherent in any audit process. So I think from that perspective, really important that we have greater transparency to address the knowledge gap. If you then think, well, what do we want to do through any recommendations to improve audit quality? And actually, I think that's, again, where transparency comes in, because I do think it will play into the performance gap, very much where Annette talked about in terms of actually what we've found with Key Audit Matters is it's not just the transparency, it's actually the quality of the conversation, but the quality of the challenge that arises in those areas that continues to enhance audit quality. So I think you're going to then have a better engagement between audit committee, shareholders, auditors in that space. And then I think the third area I would say is a lot of what's done on fraud now, and there is work done on fraud, is the hidden value of audit. And we really need to be able to translate that sort of hidden value to really demonstrate what audit can and does do now, not just what it could or should do in the future. So I'll leave it there, but that was the sort of 3 elements. So yes to transparency, but transparency with purpose.
Yeah, excellent. Thank you. Suresh?
Yeah, I suppose transparency, I would sort of say there's, you've got to analyze it or break it into 2 areas. Transparency, firstly, between the external auditor and the audit committee, which is, there could be that discussion, and then transparency to the capital markets. So those 2 are quite different, I think. I think in terms of transparency with the audit committee, I think it just needs to be almost the minimum things kind of defined as to what the quality of that discussion should be. One of the concepts that we have in our governance code is a concept called combined assurance, where you take the risk assessment process and then say, okay, well, if all these are all the risks at a business level, where does the organization, entity, company, whatever, obtain assurance on those risks? And maybe there needs to be a better dialogue around those things, because a lot of those areas are covered by internal audit as well. They are also covered by investigations. You also have a whistleblower line. All of those things need to come together somehow with the audit committee. So I would say that would be something that we should be thinking about, to say, is there something that we can do more on combined assurance? That is not just, because I think the key thing is, I think everybody said this, that this is not just an auditor problem. It's a broader problem, that there's other players in the corporate governance chain that should be also assisting. And somehow we need to bring that together, particularly in the form of combined assurance, saying, this is what we're looking at. I mean, some of these things are, and I don't know, regulations are different from country to country, but in our country, audit quality, and where your regulator does a quality review, that report is issued to the company as well. And the audit committee looks at that. Now, that may be a rule, but those are all part of that process of building that combined assurance, that you're comfortable with the quality of the auditor, the quality of the audit partner, the processes that has been followed, that's been externally reviewed. And then, internal auditors, how do they play into this? We also often, in larger organizations, you also have an investigations function. How does that fit into it? Is there anything coming out of that process? If you put all of those together, that may assist in dealing with transparency, as I say, even if it's not to the capital markets, but just in terms of auditor performance, that you have a better chance of picking up things that internal auditors, because often, I think the current standards often says obtain an understanding of the business, obtain an understanding of internal controls, the environment, but then so often you go into a substantive approach. And when they go into substantive approach, then often you don't even look at, what internal audit is doing. But I think we need to somehow build that to sort of say it's all part of that chain, because these things, as you say, you just often find a little question that internal audit did some work, and it may trigger the audit committee to say, well, why is this happening? So I think I would still say performance by a group of people, rather than just placing all the kind of emphasis on external audit reporting. And part of that process may be that we have discussed the matters with internal auditors as well, and it may be part of the whole process of when we say we've looked at internal controls, and our internal controls can involve the first, second line, and third line of defense. It's all of that, building that into the communication process.
Yeah, thank you. I like that concept of combined assurance, and I think in the last couple of years I have drawn for various clients a system of assurance or sources of assurance to try and show them that ecosystem, that it's not just us, but I think that's a really interesting concept, and it's a beautiful segue to question 5. So thank you very much for helping me out, Suresh, because that is focused on other players in the ecosystem that might have a role to play, and you've kind of described a little bit of some of those players as well. So in the 3 minutes that we have left, if there was anyone else who wanted to give some views in response to question 5 on things that either us, IAASB, or maybe others in that ecosystem might be able to do to help narrow it. And I know there's been a number of comments already made that I've scribbled down that help answer this question as well, but just if there was anything else people wanted to cover off. And I see, Suresh, you've still got your hand up, so I'm happy to throw to you first since you've left it up, but if you take it down quickly enough, then I'll give you a free pass.
That's fine. I suppose the one, from my experience, the one kind of external party in the ecosystem that seems to be playing a lot of role, play quite a big role in terms of what investors and how investors exercise their votes, is proxy advisors. They seem to be telling companies what to do and, reappoint the auditor. They go through the audit report. Now, if they can be brought into the role somehow to sort of say, what are their expectations? What are their processes? So that, if there's issues that they do bubble up. I'm sure, in other countries, but I know in my country, proxy advisors, I've yet to find investment houses voting not in line with what proxy advisors would advise. They would not go against that. So it's if the proxy advisors become a gatekeeper of audit quality and what audit performance, it will be important to engage with them to sort of see what are their standards, and because they should need to be brought into the governance chain as well.
Yeah, that's a good point. I mean, they've become quite powerful in my part of the world too. I'm not sure that I would say they have a lot of governance or standards, but anyway, that would just be my uneducated observation, of course. Anyone else want to make a comment on this space before we get hooked back out again?
Fiona, just to come in briefly, I think actually it's the role of preparers though, and the responsibilities placed on directors, which I know varies considerably from jurisdiction to jurisdiction, but it is very important that that is considered in tandem with any changes to audit, I think, in respect of that.
Yeah, I think there's a number of people in the ecosystem, which I think, Suresh, you mentioned some other ones as well, when you think about that 3 lines of defence model also, which is helpful input as well. So we have 23 seconds, so I'm not going to try and get someone to get cut off halfway through the conversation, but I will say thank you very much